Hello and welcome to the ET Money Show, and let's get started with our first discussion. With consistent uptick in the SIP inflows and increase in the mutual fund folios, 2022 has been a bright year for the mutual funds. Now, despite volatility across the equity markets worldwide, mutual funds have continued to provide some promising returns. While the large cap mutual funds were the top performer in the last 1 year with returns of 3.15%, small caps and flexicap funds were the worst performer. And in this scenario, the big question is, how will mutual funds perform in 2023 and which categories of the fund should you bet on in the year ahead? And to answer all these questions, let me bring on board Swarup Mohanty, who is the CEO at Mirae Asset Global Investments India. Hi, a very good evening, Swarup, and thank you so much for joining us today on ET Now. Firstly, you are the expert out here, so wanted to understand from you, because we do have those broad numbers with us with each category performing, but 2022 has been a remarkable one for mutual industry in terms of the SIP inflows. Not just the index was seen to be hitting its all-time high levels, but in all-time high record numbers for the SIP inflows in India. But how was 2022 for the mutual fund industry?
Srishti, at the outset, thank you so much for having me. It's an absolute pleasure to be on your show. Yes, a very, very big year and a very eventful year for the mutual fund industry, 2022. I mean, 40 lakh crore of AUM, it did cross, and we added over 1 crore of folios last year. From a consolidation perspective, a lot of products were on the core side were launched. So if you look at the broad mutual fund houses, we've almost completed all the products that are available on the active side after categorization on the equity side. The passive side saw the industry, came out with some great launches. As you rightly said, the SIP book continues to grow. And right now, I can dare say it's the backbone of the mutual fund industry equity flows. On the other side, the target maturity products on the passive debt side also gave investors a great opportunity to lock into some good yields in these interest rising scenarios. We also saw some great new entrants into the mutual fund industry, as well as some M&As in that space. So overall, a year of action for the overall industry.
Action-packed year for the industry, but wanted to know from you, Swarup, we do have the broad numbers with us, but one category that outperformed for the mutual fund industry in 2022, and other than that, which were the actual underperformance, which were not able to make money this particular year itself for the investors. If you could highlight both of these.
Srishti, when you look at the overall returns category-wise, I think it's been a year of practically no returns on various market cap indices. And that's reflected broadly on the different categories. You started by saying the large cap, incidentally, ends the year with a high performer, something we've been highlighting post-COVID, that a lot has changed for the markets underlying, and it's right now advantage large companies. But when you compare this to global markets, the Indian markets have stood firm. And if you were to give a relative performance of the Indian markets vis-a-vis the rest of the world, I think our markets have held firm. And in the scenario of the uncertainties that engulf us, I think I will take this any day over what could have possibly gone wrong. But some of the themes have started generating returns. I think consumption, banking, and especially PSU banks have started giving you good returns. So here's a question I ask everybody, and then that's the global way of investing, that has the time of Indian investors come to move ahead from market cap investing to identifying long-term structural themes. That's how mature markets invest, but India is still in market cap investing. So it's a question which needs to be, looked at far deeper than just leaving it at that. On the debt side, I think the target maturity plans have given good returns to the investors. And there are two sides to the broad investing story. So it's been a mixed bag from a return perspective.
Okay, Swarup, the only reason that I asked you this question was to set the stage, because my next question is, what is your outlook? Because for the mutual fund industry, it should not be just 1 year returns itself, but 2022 has been a muted year in terms of return. But coming 2023, as per you, which category is expected to outperform? You did mention that the debt performed fairly better in terms of the equity side of the business, but going forward, do you expect the same to happen? Because we are still in the interest rates rising scenario, and keeping that in mind with the global recessionary fears, global slowdown fears as well, what is your outlook that which particular category will be able to generate that alpha for the investors, be it large cap, small cap, or any flexi or multi-cap fund that you have in mind?
I think you rightly said that, when you look at the globe or any scenario which is interest rising in nature, re-rating of equities find a very small sort of bucket. And that is the scenario that we are in. Post-COVID, a lot changed for the industry. And we've been saying that post-COVID, it is advantage the large companies because there's a fair amount of consolidation happening across sectors. And when that happens, it is advantage capital markets, it's advantage listed companies, it is also advantage large companies. Post-COVID, some of the scenarios will test mid and small balance sheets, and that is beginning to play out. So one has to look at mid cap investing or small cap investing from a longer time horizon than it was, say, in the past. But in the near term, when there is so much of uncertainty, our house view is to remain with large balance sheets, stronger balance sheets with good cash flow. So our advice will be still to stick in the top 50 or probably the top 100 companies when you look at investing. But market, when you look at creating wealth, it is about asset allocation. It is about allocating across horizons, across the market. So the continuation of some of the themes we do believe will play out. We do expect consumption, healthcare, banking to continue its performance from here on. Banking, we've seen unfolding, the beginning of banking funds unfolding, but we expect consumption and healthcare to have a different sort of journey from here on. Maybe one could relook at them. And the target maturity plans will continue to give decent yields from an environment perspective. And investors need to understand that you will only make money when you remain invested in the market and carry the journey of the capital markets with you. So in the short run, maybe it is advantage the larger companies, but to invest in smaller market cap companies, one has to really extend the horizon and be a little picky of which balance sheets you own.
You did highlight some of the sectors for our viewers. That's really interesting to know. So is this will that be a good bet to go for some of the thematic funds? In India, we don't have a thematic fund for all the sectors, but broadly, at least for healthcare and consumptions, we do have. You all already seen that PSU banking space and all matter, the banking space has performed very well in 2022. But going forward, can one take a bet on some of the thematic funds out there? Will that be a decent or an approach where you can expect better returns?
Srishti, not only in India, but globally, we are known for our thematic plays. Our consumption fund will get into its 10th year next year. And then as we speak, consumption gets re-rated. So it continues its journey. So unlike the broad view that thematic is for timing and for investors who can come in and go out at a particular time, which is what sectors need to be looked at. The themes are broad, diversified sort of plays, and which continue to grow over a period of time. When we launched consumption 10 years ago, it was FMCG. When we launched healthcare some 3-4 years ago, it was practically pharma. Banking, financials, fintech used to be just banks 15 years ago. So these are structural long-term plays which can be looked at for adding that slight kicker in returns on the satellite side of the portfolio. But the core side of the portfolio should be formed out of strong, structurally good companies, and that will remain large market cap companies is my opinion.
Swarup, just want to know your take on the SIP numbers, because although we have seen that 2022 For many months, the SIP numbers were at record levels, but in the recent past, we are seeing that the redemption numbers are also inching up. Going forward in 2023, keeping inflation and the global slowdown in view, where do you see the redemption numbers panning out to be? Do you expect this trend to go on for some more time, or maybe the SIPs can fare even better than the redemption numbers?
Sixty people do invest to redeem at some time or the other. Some redemptions are due to financial needs or goal, while some other just time the market. People who time markets come to know that it's a futile exercise over a period of time, and they graduate as an investor. SIP today is the go-to investment route for investors in India, and I do expect that to continue. It is a good form of participating in the capital markets, and one does benefit from its volatility. It does catch the ups and lows, and one benefits through the rupee cost averaging route. See, the industry, on equity does a gross purchase between 24,000 to 26,000 crores per month. It's a fairly large number. On overall, I see this going up consistently. I wouldn't be surprised if we hit the 30,000 crore purchase per month sort of figure. India broadly, is an accumulation story, and the SIP strategy marries into that. So it's a good strategy to invest in India. I see no stoppage on that. Maybe in the short run, due to the global volatility and the negative news that one gets, one succumbs to the noise and kinds of stops it. But one will graduate over a period of time, and I don't see that trend changing. But what I'm happy to see when you look at redemptions is that people are now redeeming at market highs. 5-6 years ago, people used to redeem at market crashes. So there's a major change in that behavior, and that's a change for the better. For people who need money, it's fine. But for others, who redeem, it would also mean a disruption of the or what we call the compounding process. And that will impact them on the overall long-term wealth creation possibilities from the growth of their money perspective.
That was a very interesting point that you highlighted. Now, where the redemptions are being made, but this brings to the last question from my side, is that keeping interest rates and the global scenario in view, you did touch upon that the debt category did perform better in 2022 in comparison to the equity side. Going forward, just wanted to understand from you what could be the better allocation in terms of, or rather the preferred asset allocation from your side. Any advice to the viewers out there?
See, I think given the unprecedented volatility and the macro headwinds, I think central banks are rising rates, higher inflation, there's a war going on, and the domestic economy could slow down based on the RBI projection of 4.5% GDP growth for next year. It is important for retail investors to focus on asset allocation and a disciplined SIP approach to benefit from these market swings. Please understand, volatility is the best friend of an SIP investor. Also, one has to realize that given the rising interest rates, it is important to also be very disciplined about the entry valuations. Lastly, I'll say, investing in companies with earning visibility from as fund managers, we believe that, and decent balance sheets, cash flow metrics, and a proven management quality should be the cornerstone for any investment thesis, is our broad house view. So that's why we believe in strong balance sheets, and this is the time to sort of play that in their portfolios in the near term.
With this, we'll let you go on that. Thank you so much, Swarup, for joining us today on the ET Money Show and helping with your insights and the expectations for the mutual fund industry in 2023. Pleasure having you.
Thank you so much.